Hello and welcome to the Friday market update. So what should a buyer do now? Mortgage rates remain slightly above 7% this week, according to Mortgage News Daily for a 30-year fixed prime borrower. Now, this is my favorite website that nobody likes. It's the most exciting website out there as far as everything mortgage goes. But looking ahead to 2025, several financial institutions have provided forecasts for mortgage rates. So Fannie Mae predicts that the average 30-year fixed mortgage rate will be around 5.7% near the end of 2025. Mortgage Bankers Association anticipates rates will fall to approximately 5.9% by the end of 2025. And the National Association of Home Builders expects a 30-year mortgage rate to be about 5.94% in 2025. So these projections suggest a gradual decline in mortgage rates throughout 2025, potentially reaching levels around 5.7 to 5.9% by year's end. However, it's important to note that these forecasts are always subject to change based on economic conditions, the economy, how it's going, inflation, what's happening there, the Federal Reserve policy and how they adjust the Fed funds rate. So I've been in mortgage business for almost 32 years. The total number of home sales when I started in 1993 was about 3.8 million. This year, Altos Research projects the number of home sales to be around 4 million in 2024. Now, keep in mind that the U.S. population has grown from approximately 260 million to 345 million, 85 million more people than when I started. And the number of households has changed tremendously as well. So this substantial increase of about 85 million over 3 decades has influenced housing demand and market dynamics. So despite this population growth, existing home sales have really not kept pace proportionally, indicating that there's potentially a lot of pent-up demand. Certainly those with a low interest rate right now are out there. There's many first-time home buyers that would like to jump in. Many millennials would like to jump in and are just trying to figure out when's the best time to do it. So if mortgage rates decline to around 6%, we could see a surge in home buying activity reminiscent of past market expansions. And we saw that most recently when it dropped down to that close to 6% just 6 weeks ago. So the biggest issue is overall housing supply. The home building industry got absolutely decimated after the 2007 Great Recession, where new home construction declined by nearly 75% from the peak. So Las Vegas was at the forefront. They had so many properties, foreclosures, everything came onto the market that the builders faced a perfect storm of challenges. Excess inventory of foreclosed homes flooding the market, stricter lending guidelines for both buyers and builders, higher costs of labor and materials, lingering economic uncertainty, which kept buyers cautious. They simply, at that time, could not build a home for less than it costs to buy an existing home. So this shortage has been more than a decade in the making. So fast forward to today, and the consequences of this prolonged slowdown are clear. So for more than a decade, the U.S. has built far fewer homes, almost half of the homes that were necessary to keep up with the population growth and the changing demographics. So according to NAR, the National Association of Realtors, the U.S. faces a potential housing shortage of 5.5 million homes. So this shortage is due to several factors, underbuilding from that time period, 2008 to 2020. Home construction has never returned to the pre-recession levels, even as the population has grown. Millennials are entering the market. This is the largest generation in U.S. history and is now its prime home buying years, adding significant demand to an already tight market. Zoning and regulatory barriers. In many areas, restrictions on land use, lengthy approval processes have also slowed the pace of new construction. Now we have some higher interest rates, land costs, higher costs of construction, materials, and higher carry costs. So this has created a huge ripple effect, and the housing shortage has driven up home prices and the rents to historic levels, creating major affordability challenges for millions of Americans. First-time home buyers in particular are definitely feeling the squeeze, and it's very scary to jump in to a mortgage payment that seems much higher than they're comfortable with. But it might be that they do that for a period of time in hopes that they can refinance down the road. So looking ahead, addressing the shortage will take time and a coordinated effort. Builders are definitely starting to try and ramp up construction where land is more affordable. They're giving a lot of finance incentives. The more homes we have, the better the real estate market will be. But can they build fast enough to keep up? The rising interest rates, material costs, labor shortages continue to hinder this progress and push home prices higher for new construction. So here's what we're likely to see in 2025. Back to the buyer. What should they do if rates fall closer to 6%? You're going to see increased competition. More buyers entering the market means competition for homes will heat up. Price stabilization or growth. Home prices are likely to start rising again as those interest rates fall. I think for the time being where they're at, we're going to see probably mild appreciation in the 3 to 5% range. Now, the opportunity for first-time home buyers with the right preparation, this could be an ideal time for a first-time home buyer to get in before prices climb too high. So this brings me to an important point. Timing matters. If you wait for rates to drop, you'll no doubt face increased competition, higher prices. But if you act now, even with slightly higher rates, you may have more negotiating power on the price and terms. And plus, don't forget, if rates drop in the future, buyers can always refinance and actually lower their mortgage payment. That mortgage payment may not be elevated for too long. So waiting too long could mean missing out on today's opportunities. Remember, when the market shifts, it moves quickly and it can be tough to time perfectly. So as always, please feel free to reach out to me to get your buyers pre-approved, ready to go, educated, get them up to speed on what's going on in the marketplace. Link to my calendars below. I would love to talk to them. Hope you guys have an awesome weekend, and we'll see you next week on the Friday Market Update. Talk to you soon. Bye-bye.